What happens when embedded lending evolves from a nice-to-have experiment to a must-have competitive advantage? Today I'm speaking with Jens Roehrborn, co-founder of Banxware, a German embedded lending provider. Over the past 6 years, Jens had witnessed platforms transform their approach to financing SME customers. E-commerce sites, neobanks, and accounting software, they have all embraced embedded lending. In our conversation, we dive deep into Banxware's strategic change. They have shifted from direct lender to what Jens calls an lending enabler. It's essentially an orchestration layer connecting platforms with multiple funding sources, including traditional banks like UniCredit's German subsidiary. In this episode, we explore how this model serves over 2 million SMEs across more than 40 platform integrations, why banks are eager to participate, and Jens' prediction that embedded finance will become as essential as online payments for platform competitiveness. My name is Lars Markel, and this is the Embedded Finance Review podcast. Every 2 weeks, I'm interviewing the builders and shapers of embedded finance. A quick note from my side. Usually I interview non-financial brands to learn about their journey of building and launching financial products. But moving forward, I will be featuring more infrastructure providers, something I've done occasionally in the past. However, I now want to explore this more regularly as they are equally important for the success of embedded finance. As usual, I will select the stories that I believe are most relevant to my listeners. So if you know a provider with an interesting story, please reach out to me. And now, let's dive in. Hi Jens, welcome to the podcast. How are you doing today and in what part of the world are you located right now?
Hi Lars, thank you for having me. I'm located in beautiful Berlin and I'm doing very well. I'm looking forward to our podcast.
Same here. It's going to be a deep dive into the world of embedded lending and specifically looking at your company Banxware and describing a little bit the little bit of a shift that you're doing right now. But before we dive into that, maybe from your perspective, you've been in the industry for quite some time by now. How would you personally describe the current state of embedded lending in Europe? And what I'm particularly interested about is what industry have you seen over the last years adopting embedded lending the most, and where do you still see some room for more adoption?
Yeah, that's a great question. We at Banxware, we were in this field of embedded finance from the very beginning. So over almost 6 years ago, we started and we saw embedded finance evolve from kind of an experiment that was mainly looked at by early adopter platforms to must-have for platforms at the moment. So major platforms in the industry that aggregate a multitude of SMEs, whether it's an e-com, whether it's a neobank, whether it's an accounting platform or what have you, realize that in order to be competitive, an embedded finance offer has to be on their platform. So it evolved from an experiment to a must-have, and that's a really good thing to be having been part of that journey. And we believe we've also become the go-to player, at least in Germany, for this kind of offering.
But do you have a favorite embedded lending, let's say, area or industry where you've seen, personally, maybe the impact of embedded lending having a significant impact?
So I think it's not just the industry, it's mainly the way and the commitment the platforms have. How deep do they allow the finance provider to embed? The deeper and the stronger the embedded proposition is, the better it works, the better it converts. It's working best in a contextual environment. So when someone is entering into a transaction that he can finance on the fly, that works fantastically well. And the third field where we see it also working very well is with neobanks. Neobanks are banks that typically don't offer at least the full spectrum of finance products a regular bank offers. And we can enable the neobanks to do that. So when you're banking with a neobank, you expect also finance options. And when they're not available, it's a strong disadvantage for this neobank. And their customers typically interact with a bank when they look for financing. So you have a contextual environment and a deep embedded proposition like we have, for instance, with Konto and with most other SME banks out there. And these also work extremely well. So from an industry perspective, because it's also in many instances contextual, e-commerce works very well. That's one of our largest cohorts, but not exclusively.
Understood. And we hinted at the beginning of the recording already a little bit about the shift that has happened in Banxware. Quite keen to dive a little bit deeper. If I put in my own ways or my own words, let's say like Banxware, when you started the company, it was purely provided on like the embedded lending provider as an all-in, like a full stack provider, maybe to use something like this. And now I think you're shifting more to something what we're calling like a lending enabler, working a lot more closely with banks, bringing them into the proposition of embedded finance as well. Obviously, would be quite interested. First question, how did you came to this realization that this shift or there's a need, there's an interest to do these kind of things? Like, how did this evolve, this decision?
It's part of the evolution of the whole embedded finance industry. So we saw in the first beginning, we saw early adopters experimenting with embedded financing to see how does it work? Is it accepted by customers? How does it convert? Is it actually worth spending time and resources to have such an offering on the platform? For most of the platforms, it worked. The experiment went very positive, and they realized working with one provider usually only covers a very small spectrum. So it's either the long tail spectrum, so the more riskier businesses, the smaller businesses that can lend at a very high price, say, for instance, with a merchant cash advance product or a term loan product from an alternative lender. Then the higher segment, so the more price-sensitive segment, the ones that the platforms actually want to pay more attention to, remained underserved because they still had to go to their banks to get financing, which was less expensive. And they went through all the hoops that you have to go through when you go to a bank and apply for a loan. And they also took much longer credit decision periods into account. So we had the situation where on platforms, smaller businesses, higher risk at higher price were served. Bigger businesses, lower risk but price sensitive, remained underserved. So we realized there are several segments that you have to serve on a platform in order to have full coverage, but no one out there did that. And it's very difficult for one lender to cover it all because he has to have different credit boxes, tap into different refinancing tools. So in order to avoid having to reinvent everything, we said, why don't we rather open up our platform integrations, which we have currently over 40, most likely more than anyone else in Germany. And we use these integrations that we have and open it up to other lenders, specialty lenders, and lenders covering certain segments that are currently underserved on these platforms. Starting with banks. Banks have the lowest cost, the cheapest lending, if you will, but also the highest threshold to overcome in order to get a loan. And with our partnership with UniCredit, Vereinsbank here, we were able to reduce this time and this friction, incorporate their credit decision process in our user experience, and allow them access to all of our platform integrations. So the platforms have the benefit. Now they also serve bigger merchants, bigger businesses with lower cost bank lending. We then, as Banxware, cover what's outside of the appetite of risk of UniCredit. And we plan to onboard additional banks and additional alternative lenders, specialty lenders, such as invoice finance providers, such as leasing providers, etc., to really cover the full spectrum of risk appetite, but also the full spectrum of loan products out there. And what these platforms that said, okay, we want to have multiple lenders on the platform also realize now is it's quite complex managing multiple lenders and lending programs on one platform. So we said, let us do that for you. Let's use our platform integration that's already existing and let us be in the middle to say, we route every loan application to the lowest cost loan offer that we have. Typically, it starts with a bank as the lowest cost provider, and then it trickles down, it cascades down to a lender that has the risk appetite for this very loan application. And this all goes fully digital, extremely fast. So this doesn't take days where we say, we found someone, here it is. It's all in our user experience end to end. And the lenders have the opportunity to get access to these SMEs. So we cover almost over 2 million SMEs are connected to the various platforms that we serve. So there's a huge potential for the lenders behind it. And it's a huge opportunity to benefit from our user experience and our data that we have collected and generated over the last 5.5 years of Banxware. And then on top, for the platforms, they cover the entire spectrum and increase more or less the finance coverage substantially, right? So that's the whole goal for us, to be put in the middle, as we call it, an orchestration layer, where we orchestrate every incoming loan application that's generated through a platform we're embedded in. And then we find the right and optimal loan product and the lowest cost credit for them. And we will still, for the foreseeable future, be taking a part of this on our own books. But we do not intend to compete or cannibalize the various lenders. We see ourselves going forward, moving gradually into the position of rather an orchestrator and tech provider than a lender. And for us, having been a lender for the past 5 years, collecting a huge amount of data, especially bank account data and platform data, has enabled us to build models to help in underwriting, to improve credit decisions of other lenders and so on. And so for us, this was really a means to an end, lending to learn really how to do it, to try. And I believe to a certain degree, we have left our imprint on embedded lending in Germany in a very substantial way. And now we're utilizing all these learnings into a tech play.
Super interesting with what you're sharing there. And I think there are quite a few points to unpack there. I think from my quite interesting, especially what you said at the beginning of the answer, like kind of the recap of like, arguably embedded lending or getting a loan directly from the platform is the best choice for many when it comes to customer experience and convenience. But still, those who will get a much worse rate are not willing to accept this rate and rather go to the tedious process of getting their money somewhere else, right? So obviously embedded is a benefit, but it also is only a benefit to a certain extent. The core financial product still has to be attractive. And so the development that you described right now, going more to the orchestration approach that you're describing, or like enabling banks, quite interesting. You also mentioned already UniCredit and specifically the German subsidiary UniCredit. I think that where you have a pretty extensive partnership, also investment. So quite keen to understand what was first there. Was first your decision to go into the orchestration world, to put it that way, and then found UniCredit? Or was it more something that with UniCredit and Hypovereinsbank, you realized that this could be something in discussion, a better suited solution for your platforms and the customers?
That's a good question. And yeah, it's kind of the chicken egg problem that you find yourself in when you start a company and you're looking for strategic investors, especially. So the investment from UniCredit was a clear strategic investment. So it came with the clear vision to build products and work together in the future. They're a relatively small investor with around 10% or so, but they've proven to be an extremely fast and reliable partner to us. We have switched from classic warehouse financing to a forward flow product with them that's had a tremendous impact on the capital intensity of our business as a lender. So that worked extremely well for both sides. So it brought our cost of capital down and the capital intensity in terms of we no longer have to put up a junior loan into a warehouse. It all originates fully in a forward flow with a UniCredit subsidiary. But we built, and this had been the main project since the investment, a joint product that integrates in Banxware. And we are able to offer in all of our platforms both a bank loan from UniCredit and a loan from Banxware. And obviously only bigger businesses that are around for some time, they have revenue for more than 1 million or so a year and a good track record, are eligible for a UniCredit loan. But we were able to reduce all friction points in the credit decision process with UniCredit down to a maximum of 3 days, during which UniCredit has to do the credit decision. And they can only do it because we run the entire process up until they decide. And that has enabled us to attract very big platforms, because the cost of lending on most of the platforms needs to come down in order to serve also the better, more creditworthy businesses. And with that, we were able to do so. So for us, we saw there's our product, there's the UniCredit product, but there's still a lot of missing steps. There's still a lot of gaps when it comes to the full-fledged of possible finance options. And I don't think a lender can build them all themselves. And therefore, we said, let's open this up. Let's have other lenders who have experience in these specialty fields for a much longer period of time and onboard them to the orchestration layer and give them access to our businesses. At the same time, the scales, it's much more scalable also internationally, and we're currently working on that as well.
Understood. And if I put the whole, let's say the lending enabler or orchestration model into an image, can I imagine it visually? I would see it from left to right. We have on the very left side, the SME customers who are on a specific platform that they're using. And then it comes to the Banxware orchestration layer. Next to this orchestration layer on the very right-hand side are the different lenders. As you said, can be now also traditional banks, but also, of course, the own books of Banxware plus maybe other alternative lenders. So we have three different stakeholders: the SME, the borrower, the platform, and the bank. So I would like to kind of spend a bit of time on each of the stakeholders to understand how this is now impact their role in this new concept. And since we were speaking already about banks and obviously understood that, say, the current first partner is the Hypo Vereinsbank German part of UniCredit. Now, I think you mentioned already you're talking to more banks to onboard them here as well. What do you think is their main motivation to be part of this Banxware orchestration layer? Is this basically, to put it in my words, is this now their chance to participate in embedded lending and reach a target group, which is maybe not so easy for them to reach anymore? Or what do you see as the main motivation for them?
Well, we always said the future of lending is embedded. It was one of our slogans some time ago. And I believe traditional lenders realize that there is the writing on the wall. This had been a theory some time ago, but meanwhile, it's more than that. It's been implemented, it's working, it's really working. And traditional lenders, and I say traditional lenders, I mean banks and standalone non-bank lenders that have standalone offering that are not embedded, realize they have to have an embedded proposition. So when you build a standalone lender or a bank, your DNA is very different from when you build an embedded finance company, because you build a lender from the bottom up, from the risk side, versus an embedded lender builds its product from the user experience, from the customer experience side. So it's a very different DNA. And for a standalone lender or a bank to say, oh, easy, we build an API and now we also integrate, it doesn't work. Neither in Germany nor in the US. We know many examples in the US where this attempt has also failed. And we believe we're the conduit between these traditional lenders, and we're opening up the opportunity to become, say, a neo-lender, right? What we hear a lot when we talk to banks, they're frightened of what the N26 and Revoluts of this world might do to them when they really take off. And they have to build a counter proposition. So they tell us often, we want a user experience that looks like N26, but the loans have to be on our books, or they have to be our bank customers and so on. And we have exactly that. We have the integration, the reach. So when you ask what do they want, what's their goal is to reach all the SMEs that we have. There's over 2 million SMEs we have behind our platform integrations. So it's reach, customer acquisition, and its user experience, the look and feel of a neo bank or a neo lender. And these are the two main goals that they have on top. It's not just traditional lenders and banks, it's also private debt providers. So for family offices and private debt providers, this is its own asset class. And typically they were limited to purchasing certain loan packages over the market as part of securitization or so. And now, for the first time, they can get direct access to loan applications. And it's also something we have far advanced discussions with these private debt providers, because they see this also as an opportunity.
Interesting. And maybe let's just jump from the banks completely to the other side, to the SME borrowers, because I think it's quite interesting to also understand how this new customer journey look like for a borrower, right? I mean, I'm guessing today an SME company who is applying for an embedded lending loan powered or done directly with Banxware, that's pretty, let's say, straightforward, or is basically the offer that this SME gets is what they accept. Now, imagine in the future, you have a couple of banks on your orchestration layer. Now, let's do this journey again. Somebody applies, and maybe in the world of e-commerce, you mentioned a strong focus on e-commerce. In the world of e-commerce, somebody is applying for a loan on an e-commerce platform. Is this company now offered a couple of different loans? How does the user journey look like for them?
No, we make it very simple. We know for a lender, two things are important. One is the user experience, so speed and convenience. So it has to go really fast. They have to know in a very short period of time, can I get this loan? Can I factor that in my business planning or not? And price. Right. So speed and convenience and price, these are the two main drivers for conversion. And we route them to the cheapest option for which they are eligible to. There are certain possibilities that we are building, but we don't have yet, which are, we have a lot of information on these businesses also from looking at their platform data, looking at their bank account data. And for many, a regular loan is really the right product. There may be one where an invoice financing product may be more suitable. For others, it may be an acquisition of machinery where leasing or sale and lease back is a better opportunity. And we will provide more or less, I wouldn't call it robo-advice, but an automated system where they also see what other options are there that are not a term loan or a line of credit that could be more beneficial for them. On top, we're offering a product together with UniCredit that where the loan is actually not a term loan as you think in a classical term. It's actually an overdraft facility that is associated with a current account. So a business that wants a loan, but he wants a line of credit, he wants to have some flexibility. We do the full credit check of the business and say, regardless of how much you want, you are eligible for a credit line up to X. We can currently do up to 5 million, but we have also done 8 million already. And this business then gets an account with an overdraft facility of up to 5 million or whatever he's eligible for behind it. And he only pays what he has utilized. He can say, I want this as a buffer and I don't utilize it, or I utilize it only for a little bit. And when I have to replenish inventory or whatever, he can then utilize this loan, this credit line without applying for a new loan. So that's actually a product that sells extremely well. We currently have that only for loans above 250,000, but we're working on also serving the smaller businesses with this kind of product. So it's really both on the product side and the risk side and the pricing side where this all comes together.
Understood. And of course, in this journey, maybe again, going back to the scenario in the e-commerce world or in the future, maybe you have a couple of different banks. Now this SME company is applying for a loan. Banxware selects the right loan. I guess I'm sure at one point you have to tell them also which financing provider or bank this offer is coming from. But specifically asking, do you think playing out the name, let's say in the example of like UniCredit or maybe some other big bank names that in the future work with Banxware, do you think this would also be an additional advantage of saying, oh, we offer you a loan here in the e-commerce platform, and this is actually coming from a brand that we know very well in the world of financial services and banks? So is that something you want to leverage as well?
Well, I believe it will come by definition because many of these businesses that we see, they have a bank account with either a neobank or with their small Sparkasse, right? And what we have really is a process that includes not only the credit decision, but also the full account opening. So they get a bank account with it, with UniCredit at that stage. So a high street bank account that also adds to more options because these big banks have more options for these businesses in terms of financing and other bank products than a neobank or a smaller Sparkasse has. So this is a very nice side effect that we're experiencing.
Understood. And now maybe coming to the platforms, we checked the banks and the SME borrowers. Now coming to the platforms in this new lending enabler model, I'm guessing what I'm quite keen to understand, do you have like certain platforms who wish to have certain banks as financial partners, maybe specific industries that where the SMEs tend to bank with certain banks, and now the platforms are saying, oh, you're working with other banks, how about you get banks X or Y, because my customers like this bank a lot, and if I would be able to offer a loan from this bank, this would be extremely valuable. Is that something that you're seeing as well, or is that strictly your decision?
So I see this only in two ways. One is certain big platforms have certain banks they don't want to work with. So that's what we had in the past. And we have certain specialty platforms that tend to work with certain specialty small banks. And a specialty small bank could be an industry-driven bank, for instance, in the automobile space, in the space of construction contractors, this kind of thing. And this is also what we're currently working on to provide, because what we want to avoid is, say, several banks next to each other that cannibalize themselves. So that there should be one bank for every category or industry of the platform and not several that are competing on our orchestration layer. That's what we want to avoid.
Do you envision that either platforms or banks, or maybe both, can select which one from this orchestration layer is acceptable? Like platforms saying, I don't want to have offers from this bank, for example, or maybe banks were saying, I don't want to be presented at platforms Y?
Honestly, I have not heard that. There are some banks that are still hesitant to open up because to a certain degree, they have to give us details what business they want to serve. We have technical options to have all the underlying credit decision criteria of a bank in our back office without us seeing this. We only see the outcome of their model. But there's still some way to go for banks fully trusting us to handle the process. And I think UniCredit's partnership gives us credibility to start with. And I believe and I see that other banks are following.
And you did mention as well that when you made the shift to, or decided to make the shift towards the orchestration approach, you specifically also mentioned that it didn't work in the US. Quite keen to understand, like when you were thinking about moving the shift and going more towards like a orchestration layer, have you looked at specifically like other geographies, if companies tried this before, what their learnings were? Obviously, this not also happens in lending, but also in other financial services or completely other industries. Is there something you could learn from other cases?
Certainly, but I mean, here in this instance, we had very large non-bank lenders reach out to us to say, we have tried to build an embedded proposition. We were not able to do it. Can you help us? And I think that speaks very well to our proposition. We're very, very clear in our product proposition and our vision. We are enabling embedded finance, and we transform the lending into embedded finance using AI. We have collected data over the last 5.5 years, like not many others can have collected, right? And so you have to imagine that every loan application that comes in, whether the loan is granted or not, we look at the platform data, we look at the bank account data, we connect a huge amount of data, and this quantitative analysis of pattern detection within all of these loan applications, all of the bank account data. We build our own bank account transaction categorization. We have models that help us optimize credit decision, help us increase acceptance, help us avoid losses. And that is something that's extremely valuable for these banks that have constraints in even analyzing and utilizing machine learning on their own data. And operating outside of bank regulation with this kind of proposition is super attractive for them. And what we saw is that everything we build in Germany, which is bank account-based underwriting, cash flow-based underwriting, so that means the credit decision is emphasizes more a forward-looking approach instead of traditional lenders looking at a backward approach. So looking into the past behaviors are decisive for the credit decision. For us, it's more future potential that's decisive for the credit decision. And this approach is extremely scalable, and we used it on data in the US, in the UK, and our models worked. And that's what we want to leverage on, and that's what we will use for our internationalization strategy that's currently ongoing.
Yeah, and I guess it's a very good point, or probably very helpful, of being first a direct lender yourself and then onboarding banks and other providers, because obviously you have proven, or you've made maybe some painful experience as well. So it's a lot easier than to onboard partner. Jens, final question. Do you have any prediction, any expectation for the development of embedded lending over the next 5 years? And you mentioned AI already, obviously one of the topics that comes up often. Is there anything that you expect now, with the last 5.5 years in embedded lending, how the next 5.5 years going to look like?
Yeah, I believe that this will become a commodity for platforms that they have to offer in order to remain competitive, whether it's a payment service provider, whether it's a neobank, whether it's a car sales platform, whether it's a construction material vendor or an e-commerce platform. And it's going to be difficult for most platforms to have the resources available to run this professionally. Most of the platforms we're targeting are not financial by nature, right? So aside of the neobanks, the core product of these platforms is not financing, not banking or anything. And all of a sudden, they have to sell finance products, but also manage the finance products. That's something that's difficult for them. It's too far away from their core business. And what we offer to them is we can take care of everything. We take care of the user experience. We do one-time integration. We give you your reporting. You get one commission from us for all of the different loan products. You cover the entire segments with all of our different lending propositions. And you can focus on your core business, which is e-commerce or whatever industry you are in. And I believe a platform that does not offer, that has a substantial size, that does not offer and spend the resources on embedded finance is going to lose out on competitiveness and customer retention. And this will become more visible in the next few years, because for the first time now, financing has become available 24/7 everywhere in a very easy and fast way, right? So you can do a super quick, you can order your pizza online around the clock, very easy, one click on your app. Now you can do almost as easy apply for a loan. This has proven in the past that users' behavior tends to follow convenience. So when you have a convenience offer, you expect it everywhere. Your platform doesn't offer that. You use another platform that offers it. So you have different sales channels in e-commerce. One sales channel offers it, the other doesn't. By definition, you run more business through the one that does, because that increases your chances to get higher financing. And I believe a platform that doesn't do it will miss out, and they will realize it. So it will even become more a must-have than it already is.
Super interesting. Thank you so much, Jens. An interesting journey you've done with Banxware so far, and now with the shift going towards the lending enabler or orchestration platform, something very interesting to follow in the next few years. If there's any listener out there, maybe a banker, maybe a platform, maybe somebody completely different, who wants to learn more about what you're doing at Banxware, is there a way to reach out to you or to your team to chat a bit?
Oh, absolutely. Send me an email, jens@banxware.com. I'm happy to answer.
Amazing. Thanks again, Jens, and until next time.
Thank you, Lars. Thank you. Take care. Bye-bye.
Thank you for listening. If you like this episode, make sure to follow my podcast and subscribe to my newsletter. And may I ask you for a favor? Please rate my podcast in your podcasting app. This will help me a lot. Thank you, and until next time.